Well, Sam, welcome back to Equity Mates.
Bryce, Alec, boys, good to be back.
Yes, we really enjoyed the last conversation we had with you all around investing in property. And today we're going to be discussing what is causing the housing shortage / crisis here in Australia.
Yeah, 100%.
Now, if you haven't listened to our previous episode with Sam, firstly, we would recommend that you go and do that. But for those that are just tuning in for the first time, Sam, can you just give us a little bit of a background on your story and also founding Australian Property Scout?
Yeah, 100%. So I guess within my story, I bought my first property at 19. Pretty much came from just about nothing, like a very middle class family. Took my time kind of working up. I'm a high school dropout. Pretty much just like worked kind of laboured and knew that property was the vehicle I wanted to eventually get into to help myself build wealth. Bought my first property at 19. Essentially, it's been almost 15 years now of investing nonstop, and yeah, essentially got bitten by the bug very, very early on. Fast forward to these days, got a 30 mil plus portfolio, 50 plus property portfolio, and yeah, man, just like absolutely live and breathe the investing side. What really spawned Australian Property Scout and where this was built from really came from probably in my mid-20s. I was burnt by another buyer's agent back in the day as well, and it was when I wasn't making very much money. So $10,000 was a lot of money to me back in the day, and yeah, got burnt by that BA at that time. Kind of went back out there and then really aggressively invested, kind of with a bit of fuel in the belly after it happening, and then after a couple of years had essentially like retired myself or replaced enough of my income that I could go traveling for a while. I went traveling for around about 12 months and then came back and was kind of trying to figure out what I wanted to do. And then, yeah, I was tossing up, like going out and getting my builder's license and developing my own projects. But I thought, I'll give this a go for a year. And then, yeah, fast forward, we're pretty much 5 years in now of Australian Property Scout and loving it. So
awesome.
Yeah.
Awesome. Great story.
Property Scout's mission is to retire 500 people by 2030.
That's right.
How many people? What's your tally? Where are you at?
So the way this works is funny because so many people ask me that question, right? But realistically, like property, it's not a game that you retire in like a couple of years, right? So like it's a compounding effect, and it's kind of, we always work through continual accumulation with our clients, and it takes time to obviously build out the portfolio initially, and then start building in some cash flow deals as well. So as of right now, I think we're literally, you'd be able to count it on one hand, but the amount of people that are probably 5 or 6 properties into maybe a 8, 10, 12 portfolio strategy, like a lot of people are halfway there, and we've still got a fair bit of time to hit that 2030 as well. So
we were talking about it before, and it's like the financial independence retire early movement is really focused on the stock market, and they're trying to build wealth through like VDHG and those sort of ETFs.
Yeah.
And it's a game of like trying to get like $2 million or $1.5 million in the stock market and then get dividends, where it's a bit different when it's property. It's about getting like positively geared cash flowing assets and having enough of those assets to...
It's a mix too, because like the way that I like to invest, realistically, a lot of people try and talk about like retiring in like 20 or 30 years in property. And I think that's longer than is necessary. I think realistically you can do it depending on what you're starting from and your income and everything, and your risk tolerance and what you're willing to do as well. Even buying 2 properties a year for 5 years, you've got a 10 property portfolio. You let that compound for the next 5 years. You're 10 years in. You sell, let's say 5 of those were high cash flow and 5 of those were growth assets. You sell off your 5 growth assets, you pay out your 5 cash flow deals. You got a higher net return from those 5 deals. That's a very like simple and methodical way of investing, and that's not going crazy. That's literally 1 every 6 months to a year sort of thing. See, okay. See, does that seem crazy?
Look, right now to me it seems crazy, but Bryce and I have just taken our first step on the property ladder. So maybe in hindsight we'll look back and say
I think it's worth pointing out though that when you are looking at the investment side of things, you're not looking at the owner occupied where we're looking at houses that are very, are in that unaffordable bracket, because if you're looking at just the numbers, you might be looking at areas that we would never live.
Well, I think the
100%, man.
The most recent CoreLogic data had Sydney's median price at a scratch over $1 million. Yeah. Correct me if I'm wrong.
It's almost 1.2, I think.
Yeah,
it's pretty big.
I don't think when you're talking about buying 2 houses a year for 5 years, you're not talking about buying $1 million places in Sydney.
No, and it's exactly kind of a point that you would make there around like a lot of people would kind of think that initially, right? But it's counter-cyclical thinking. So it's think it's changing that perspective and the persona, perception of what you need to be buying, and targeting especially areas that haven't gone through significant cycles in the last 10 years. Just kind of counter-cyclically investing out there in the market. And when you do that, you're buying at much lower price points, but positioning yourself for really good growth as well. So definitely not talking about 2 a year at a couple of mil. We're definitely not at that, renting for nothing. We're not talking about that sort of stuff.
Well, we want to talk about the housing market today because we lived through 12 interest rate rises in 13 months.
Yep.
We've just seen another interest rate rise on Melbourne Cup Day.
Yes.
But I think if we're not back at all-time highs, we're very close to all-time highs.
Yeah.
So I think the first question is, do interest rates work?
Do they work? Okay, so we're in a very unique position in the market. Yes, they work to an extent, right? Like, the one thing I'd say is, can you imagine where the market would be if they hadn't done them? Like, if it's done a dampener as it is, we're up like almost 4.5% in 18-month window of rate rises. Can you imagine where the market would be if they hadn't brought that in? Because it's pulled a lot of people out of the market. But I think that's what we're going to really unpack today as well, where rate rises aren't the be all end all, and the big game changing market mover. Yes, they will have an influence on the market, but everyone's got to remember the RBA's only got one blunt instrument to have a crack at curbing the market. But when you got inflation doing its thing, you got population growth doing its thing, you got builders going under, you got no stock, massive supply deficits and stock deficits. Like it's a rate rises are only one piece in the bigger puzzle. So
let's use that as the stepping stone. You mentioned a number of factors there.
Yes.
For those sitting at home wondering about the question, do rate rises work, interest rates work, and why isn't the property market doing what you would expect it to do? What are some of the most important factors that are weighing on the housing market at the moment?
Yeah, so if we look at, there was data that came out actually in March, so we haven't had any renewed data since March, but in March 2023, the ABS reported there was a 454,000 increase in population just from overseas migration. Throw on it, and there's another 110,000. So we're talking about a population increase of over 550,000 in 1 year. We've never done anywhere near that before. I don't even think we've ever done half of that before, right? So when we push that into perspective, that's a huge increase in population in 1 year. But then you throw on top of it how tight those stock levels are at the moment. And the stock levels, if you rewind all the way back to the start of 2020, when COVID first kicked off, what happened was, in the marketplace, there was, when COVID first kicked in, right, everyone came out and said, well, not everyone, but there was a few people that came out and said, 20, 30, 40% price drops were going to be coming and the market was going to crash and all the rest of it. You remember these conversations? Yeah. And
I actually picked up a really cheap rental at that time.
There you go.
Rentals are crashed.
Yeah, man. It was a crazy time, right? And I remember, we were very early, I think we were 12 going into our second year of business. I think we're just in the second year of business. Everything went dead. Yeah. And I had this prediction that really what was going to happen, that I believed was going to happen, was there was two parties in the market, right? There was those who needed to sell and those who didn't. And those who needed to sell took a haircut and they sold because there weren't that many people around buying. So it was very discounted property everywhere. But the people who didn't need to sell and financially reasonably stable, they pulled their properties back off the market. It created this massive stock shortage. There was nothing on the market. And then in 3-6 months, no one was putting anything on because there was so much like uncertainty. And when there's uncertainty, people don't buy and not so much people don't buy, people don't sell. Like everyone was kind of sitting on the sidelines. But then people weren't able to travel. So then all of a sudden you've got all these people with extra money in their pockets. Things are still, like there were a lot of businesses that actually started thriving during that time as well. So some things suffered, but some things thrived. And it kind of went through this really weird period where stock never fully picked up, and it definitely didn't pick up enough to match demand. And that's where we saw so much price growth. Like if you look at Sydney and Melbourne, never had a right to have another boom and have another run. And yet some areas in Sydney saw another 60, 80% growth in those 2 years of COVID. But then you look at the regional locations, you look at Brisbane, went crazy. Southeast Queensland went crazy because a lot of people were getting out of Sydney and Melbourne at that time. I was one of them, literally. Yeah. And I know a lot of people that did the same thing.
The regions also went crazy. Wagga, where Bryce is from, Orange.
I'm from the Highlands, man, and like properties that I had bought in early 2010s, they all doubled in the Sydney boom, and then in the COVID boom, because it was the next council outside of Sydney where there was no lockdowns, it doubled again because everyone just flooded there. Rents went crazy, prices went crazy, and so like I think the point I'm getting at here is just stock was at an all-time low, and there was a little blip in 2022 where stock did pick up a little bit in some of these areas, but really we've been at this stock deficit now really since kind of 2020. Then you throw on like the 12 months up until March where we've had this huge population surge because they've been getting people in as quickly as possible. But then even since then, they've been ramping it up. The government's been ramping it up to try and get as many skilled migrants into the country as possible. There's been a shortage of almost all industries, even hospitality, but especially trades. Like that's why build prices went so crazy. There was such a labor shortage. A lot of people out there in the economy were bringing retirement plans forward. So there's this huge exodus out of the workforce during COVID. This huge trade shortage, labor shortage and everything, right? So that's one of the big reasons build prices then went crazy as well. It's just this huge kind of cumulative effect as to what's really held the floor under the market, because there's been no stock, there's been no supply, but there's been this huge influx of new people coming into the market as well, into Australia.
Yeah, so I think the numbers, so you said 450,000 people.
Yep.
And Australia built about 180,000 houses, which is close to a record in terms of the amount that we've built in a year.
Yeah, but still almost like a third of what we need, right?
Yeah. And the government, they want to build 1.2 million homes in the next 5 or 6 years.
Yeah.
Which would be like a record every year.
But the thing is, we can't do it. We don't have the trade and we don't have the materials. Material shortage was the other massive one that because we develop a little bit as well. And we were battling that during COVID of just like builders not having stock, not having material, So it's...
Then to compound that, the second factor was that a lot of builders actually went out of business as well.
Yeah, huge amount.
Yeah. We, a friend of ours, he was halfway through a renovation and the builder just went bust.
Oh, no way.
Yeah.
Yeah.
So, tell us a bit more about what's been going on there.
Yeah, so the build industry was an extremely tricky game again during COVID, and like for the last 3 years, the build price has been going crazy. So like what you could build a standard 4x2, it's 4-bedroom, 2-bathroom, double garage home a few years ago might have been 250, 300 grand. That's now like 450, 500,000 for like a specky sort of style build. So we're up like 70, 80% on build prices in that time frame. Now, what happened during that period, right, is, and a lot of people were like, calling for builders' heads because they were doing these huge price increases to their contracts. But what they were doing is they were trying to forecast where they thought build prices were going to go. The issue was by the time they finally came through to being built, the price they could actually get the materials for had again skyrocketed, plus the labor costs. I remember in Perth, brickies like tripled their prices overnight because they knew how much they needed. Because in Perth, they build almost everything double brick. So they put their prices through the roof and the builders had to pay it or they couldn't complete projects. So what was happening was by the time they'd finally started build, materials and trade prices had increased so much that it actually wasn't viable to do the build. So they would either offer the deposit back, I can't build it. They would ask them to come up to the contract price that would allow them to actually complete the build and not go under. Yeah. Or they'd fold.
Yeah.
And so a lot of builders folded because people wouldn't come up. And it's a really tricky thing because for the consumer, you might be sitting there going, well, this builder's asking me for an extra 50 grand. But the builder's sitting there going, if I don't get the extra 50 grand,
you're not getting a house.
We'll go under. Yeah. Like I can't complete.
I can't afford it.
And when there's a lot of like mid-tier builders that might have 50 builds on the go. They might build 200 a year or something. That sends them under, stuff like that. So it was a crazy period where we just saw this massive, and it has slowed down a lot, that price increase. I think the labor has eased off a little bit, those trade, price increases and everything as well. But man, it was just, it was a wild period there for sure.
And so the flow-on of that is that we need the builders for more stock. And if more and more are going under, it's another reason why you could argue that house prices are supported.
Yeah. One of the other crazy things, right, is that's one of the huge reasons for the immigration driving super high population growth is getting skilled migrants into the country. The one issue with that is they also need housing. So what happens when people first move into the country is they can't buy straight away. It was like we were chatting about this off air. Is they don't come in super wealthy. Maybe it's 1% or 0.5% of people could afford to maybe buy. So what happens is that then they come in and they put huge pressure on the rental market. And so that's why we've seen vacancy rates come down so much. And probably almost everyone we know would have felt rental price increase, whether you're as an investor putting your rents up, because that's where the market now is. And because your interest rates have gone up so much, you've got to put it up to be able to hold that investment as well. Or you're the average consumer and renter out there, and you're having to pay that extra from that rental perspective as well. So it's been a wild little window of just watching all this stuff build. And
we've spoken a bit about Bryce's rental story, because I think it really encapsulates where at least Sydney is. But you were paying a price, you got a 25% rent increase, and then as you told them you were moving out, they were going to increase it again about 30% or something.
Wow.
If not more, $750 to $950.
Oh, yeah, that's massive.
So I started at $560.
How long ago was that at $560?
COVID. I got it at the depths of COVID.
No way.
Yeah, it was up for $850, and I said $560. They said done.
How's that for negotiating? You want a job?
$560.
So $560 to $950.
And then they went $560 to $610. And then 6 months ago, or about that, they went $610 to $750.
Yeah.
And now I told them we're moving out, and we had some mates who'd like to move in. They said, yeah, sweet. Owner wants $950 for a 1.5 beddie. It's
wow.
ridiculous.
Really?
Yeah.
It's nuts, eh? It's crazy, man.
Sydney, eh?
Yeah.
Come on. And then the thing is, we went back to the agent, and usually where you could say, oh, they'll move in straight away or whatever. Can we, I didn't do the negotiating for them, but they're like, these are what we can offer if we can get the price down to even $850.
Yeah.
And the agent's just like, guys,
yeah,
we're gonna have people out the door.
Yeah. That's crazy. So one thing with that, I'll just if you don't mind, is one of the huge things we're seeing is typically your big cities are where your migrants always come to initially, right? So so much of it because they obviously know those places firstly, so they'll come and they'll start here. But what we're actually seeing is actually a huge amount of interstate migration of Aussies moving away from the big cities because they can't actually afford it anymore. Because exactly that example you're giving there, $400 a week rent increases in in a 3-year window. So what we're seeing is a lot of people actually moving to the smaller states as well, especially to the capital cities. It's been a bit of a max exodus from a interstate migration perspective as well, which has been very, very interesting to see.
So Sam, if we can sort of tie all of these factors together, there's a shortage of housing and we need more housing. But to build more housing, we don't have the labourers, and so we've seen massive net migration. But people coming to this country need housing.
Yes.
And that then it's like a self-reinforcing cycle that seems to just add pressure. And so I guess the question and what we want to talk to you about is what next and where does this go? So we're going to put that question to you after the break. Welcome back to Equity Mates. We're talking to Sam Gordon, the founder of Australian Property Scout, the co-host of the Scouting Australia podcast, and we're talking all things property.
We are, mate.
And we've just seen what's gone on the past year. Interest rates have gone up massively, and the Australian housing market did dip a little bit. I think it was down maybe 10%, but it's come back. It's near all-time highs. We spoke about some of the factors driving that: the shortage of housing, the net overseas migration, and builders and going bankrupt. I guess the question is, what next? So when we were going back and forth before the interview, I think you said we're going to see markets push into higher than ever before seen growth rates and for extended periods of time.
Yes.
For half of Australia, that don't own houses, that's terrible news. Yeah. And for the half of Australians that do own houses, it's music to their ears. Yeah. So to flesh that out a bit, tell us what you think is going to happen and just how big it might be.
Yeah, man. So I think it's also the important thing to note, it's always relative to the area, right? So like, I don't think this is going to be Australia-wide. So in COVID, we obviously saw like a really big nationwide boom where almost everywhere it rose to an extent. Obviously location, again, dependent on the supply and demand, on where it was, depended how big it went, how big a boom it did have. But what I think we're going to see is in almost all areas, there's going to be another level of price growth, even in my opinion, like unaffordable markets like Sydney. That is going to be pushed from a few things. Obviously, supply is still quite tight. You've still got that huge, strong migration coming into the country as well. But as we were chatting about before, we're seeing those big rental increases. So you're going to see a lot of renters like you boys go out there and buy primary residences if they can afford to do it, because the rents are going up so much as well. So, and that rental growth more than likely isn't going to slow because we've got so much coming in. There's still going to be so much pressure on that market. If there isn't enough stock and it keeps building up, the rents are just going to keep rising as well. Now, I think that's going to hold a lot of those markets, and again, in my opinion, are a little bit unaffordable. I think it's going to hold a nice floor under the market and probably give them a little bit of raise, right? But what I think we're going to see is a lot of these other capital cities that have actually... It's funny because we kind of look at Sydney, which dipped in 22 and then has kind of rebounded kind of to the same levels it was at the back end of COVID. But then there's a lot of other locations out there in smaller cities, Brisbane, Perth, Adelaide. They're all doing between 20-25% growth a year at the moment for the last 2 years. Interest rates have done 4.5% increases in 18 months, and yet they've still outperformed and done these massive growth runs. And so have a fair few regional locations as well. And so what we're really seeing out there when we dive in and we do all this research internally is if those areas have performed to this extent, right, and supply isn't being solved anytime soon, they can't build enough houses, there isn't enough land coming through, there's too much red tape, it takes too long to get it through. Developers also aren't getting the sale prices they need at the moment, and the build costs are too high, so it doesn't make sense for them to develop. So they're shelving projects, right? But then you've also got this huge continued pressure on the market from the amount of people coming in and then renting as well, then pushing more and more people into the sales market and buying. I think from all these sorts of perspectives in here, we're going to see continued house price growth, and quite a strong period for the next 2 to 3 years as a minimum, in my opinion, especially in the smaller capitals, but a lot of strong regionals that have really good, solid, booming economies. Because what you're going to find is a lot of migrants might come into the big cities and go, have a crack at it for 6-12 months and go, this is an unaffordable place to live. Where are some other job opportunities that I can go and maybe try and set some roots with the family and actually afford to live? And so I think we're going to see more of that. That'll be the next 2 to 3 years, right? What I think is going to extend this beyond the norm is then after 2 to 3 years, what typically happens with a migrant? They get permanent residency and they try and buy their piece of Australia as well. So then you're going to find that because they're talking about driving this huge immigration, this population growth for the next 4 to 5 years, because they're really trying to keep the economy strong at the same time as trying to drive a bit of unemployment and stuff to try and balance out this inflationary period, right? The high inflationary period we're in. So pushing for that long, then when those people 2 to 3 years in after moving in, then they're trying to then buy their own homes as well. It's going to put additional pressure on the sales market, and more people, if you're literally talking like 500,000 a year or more, they're trying to push for record years every year in terms of that. They're never going to keep up with it. The supply level of property is actually never going to come through to keep up with it. So the more and more we dissected this and dug deeper and deeper, it's just like, this isn't going to solve itself anytime soon. They can't build enough homes. The only way to really solve this is to cut immigration, which they're not going to do because they need the trade.
Yeah, that's something that I've been thinking about this week though, because the
crazy.
RBA, I think for the first time, well, at least as far as I'm aware, publicly put pressure on the government. Well, not pressure, but publicly said, your immigration policy is really cooking inflation right now. Like, you're letting far too many people in. Yeah. And it's just like what we can do with our interest rates is only one thing. But there are many other things that the government can do to pull back on inflation and obviously a lot of the impact of what that is doing to rentals and those sorts of things. So all you need is the government to say, you know what, we do desperately need to do something about this. We're going to halve our immigration for 3 years, but but
then that affects other policy priorities
and the economy, right? Which they're trying to keep up. So,
but it's funny because there's like two competing things. Like the RBA wants the economy to chill out. Like you want to slow everything down so that inflation falls, but the government's like, to your point, like has policies that are counterintuitive to that.
I mean, there are more extreme levers the government could pull, like, I don't know,
rental caps,
ban Airbnbs. Yeah, rental caps not great.
Well, the issue with rental caps is they can't keep jacking, because they did that in Victoria, right? But the issue with like rental caps is they can't keep jacking interest rates and then expect investors to be able to hold rental caps because, like, at the end of the day, they're still got to be able to survive from that perspective. So then you're making it super unaffordable for them. Or like a lot of those guys would sell out because like, well, I can't actually afford to hold this property with interest rates still climbing, but I can't increase my rentals. So rental caps definitely isn't the solution. I know what you're saying with a few of these other points as well, but it's just like, this is where it's vicious, right? It's a vicious cycle, and it literally will just keep moving like that. The only way really is bringing that immigration level down, but I just don't see it. I don't think it's going to happen. They keep pushing it. They keep talking about how hard they're going to push it. But I think ultimately they're pushing that so hard, in my opinion, because they're trying to obviously level off especially where labour prices got to as well. So they're trying to level out and curb that off as well. And they're trying to drive higher unemployment because that's what obviously drives that. If there's not as many people or there's more people looking for it, obviously people can lower their rates as to what they get paid as well.
Or it just gets to a point where probably markets more like Sydney probably more Sydney and Melbourne, not so much the regionals and whatnot, where it just becomes so much of a proportion of your take-home pay that you just kill the demand. Like people just literally like...
Yeah, but like rent is becoming such a big portion of... Like this is just becoming like a...
But like surely mathematically...
Like the demand for housing is inelastic. In like either form, owning or renting. Like there's no alternative.
But like mathematically, surely there has to be at some point. Like you're not going to pay 100% of your take home into housing.
Well, that's why there is a cap though. There are caps, and that's set by APPA, which is the Australian Prudential Regulating Authority. Glad I got that one right. But what they do is because they're kind of that other governing body of debt in the country, right? So like they look at it and go, okay, well, how do we curb these things as well? So they bring in different things. It's mainly around investors. So it's different things to curb investor, and that's what slowed Sydney in 2015, 16, 17. That's how they pulled Sydney back from its crazy run. But they have their caps in terms of what you can, regulatory like lending, right? So like what's a responsible way of lending. They have their caps on income to debt ratios as well, DTIs and whatnot too. And a lot of lenders have to stay within that DTI policy. But the issue is, man, like when you've got that fuel in the fire from the rental perspective and more people are trying to jump in, it's just, it just keeps throwing that fuel in the fire.
Yeah, because like I hear this conversation and like this is, you're not going to love what I say.
Go for it, man. It's all good.
Like the first thing I say is like the treatment of housing as a financial asset is part of the problem. And, maybe it's about tax treatment. Maybe it's about limiting negative gearing to like one or two properties. Maybe there's things you can do there. But like this isn't a house price conversation. This is now like a housing availability conversation.
Yeah, that is true.
And it's not like, the challenge is there's renters who want to buy and can't get their first home. The challenge is now people can't get rentals or housing. So it's like all of the financialization of housing conversation is kind of like moot to actually solve this problem, which is there's not enough roofs.
What they need to do, but really the better incentive for that would be to create schemes for affordable housing. So,
and who's going to build them? That's the challenge.
But man, there are builders so I'm talking about even just things like granny flats and things like this, right? Like additional rentals from that perspective. How do we cut the red tape so someone can build a 200 200 room tower or something like that in high density areas like Sydney? Different things like that. The red tape is what really slows it down.
The granny flat thing there's been a few reports about that recently. They reckon it's like 500,000 houses or roofs could be built.
Yeah, 100%.
The other interesting one was office buildings. There was a building in Melbourne that got converted from an office building to residential. Yeah. Like that's an interesting
100%,
thing.
Man. Looking for things like that. There are alternative solutions that fix, especially from the rental perspective as well.
But like the fact that these are the conversations we're having, it shows how deep the problem is.
But you know what the other crazy thing is, mate? We're 1 year into a 4 to 5 year aggressive immigration policy. So if we're 1 year into it, where we're going to be in 3-5 years? Like it's just going to be crazy. The one quick
interest rate's going to be in 3 to 5 years.
This is one thing I was going to say. So that's when we talk about like where does this thing go? Because like where we're looking at it, the current factors push it into a boom, right? Push a lot of areas into proper boom, and a lot of areas are already in it. Like you start talking 20, 25, 30%. If you said that to an investor 10 years ago, you can get that in terms, mate. They would light up. Like that's unbelievable from a property perspective because you're leveraging into it, and then you're getting that growth on top, compounding as well, right? But then you look at that and all the factors in play right now are creating a boom. And when we pulled this whole thing apart, it's funny that you mentioned where interest rate's going to be because are you thinking up or down?
Definitely.
Wow. I mean, when? In what time period?
Let's say 2 years.
Well, I mean, the fact that I'm highly leveraged, I would hope
Forget what you want.
I reckon I've changed my tune a bit. I reckon there's a chance that... I think that there might be a chance that they're up.
That they're up.
I reckon.
Yeah.
I
think like if inflation is going to be stubbornly high because of factors outside the RBA's control, cost of housing and cost of fuel,
yeah.
Directionally it can only go one way. Like unless we just change how we calculate inflation.
Yeah, because we were talking about this off air. Obviously, one of the big things is rent coming into the equation, but throwing rent into the equation of inflation is a pretty it's obviously when it changes as it is increasing, it's a crazy influence on the inflationary number as well. So,
what do you think?
I don't think a lot of people were saying, they think next year it's going to come back. A lot of property economists. I don't think it's going to come back next year. I think you're right in terms of the inflation is too stubbornly high at the moment. But I do personally believe in 2025, we're potentially going to see it start coming back a bit. If they push the unemployment rate up, which I think will come about, that's essentially why they're driving this migration so hard. They're trying to create additional labor to try and drop those pricing. And if they drive that unemployment rate up, then that's when I think, because if people start struggling a little bit, that's when they'll start clipping it back a bit. You can't go from 2% interest rates to 6.5% interest rates, right? And then think people are going to be able to afford it and not send a large portion of their country into bankruptcy, which would happen if they keep going higher and then leave it super high, because it's unaffordable, because the buffer rates that they had in, even though they were high, they were 3%. So if you ran your servicing if you were borrowing at 2 and then they run it at 5, and all of a sudden we're at 6.5 going on 7, they can't then go keep running it higher and higher, because you literally will send a huge portion of people who bought in the last couple of years under. So I think that with what they're pushing on there, and this is where we're looking at this thing and going, all right, the first 3 factors of supply, build's not coming through. So we've got this huge supply deficit. There's not enough stock, and we've got this huge population increase. That's going to push into boom. Then if in 2 to 3 years, a lot of these migrants, even a lot of them still coming in, these skilled migrants coming in, they're still putting the pressure on the rental market. But then we're seeing the early migrants that came in, then transitioning into purchasing. That's going to put the additional pressure on. But then if interest rates start coming back as well, I think it's just going to be
if
wild.
Interest rates go down, see you later.
It's going to be crazy.
Which is why, maybe if the economy really starts to struggle, but I think this level of population growth, you would expect the economy to do pretty well on the whole. And I just don't really see there would be a burning platform for them to cut interest rates.
Yeah.
That's just my view. But look, we don't know. We're all just forecasting.
We are.
Yeah. And
but even if you look at those first 4 factors, even if you leave the interest rates out of the equation, those first 4 factors, mate, we're in for a pretty crazy in my opinion, next 3 to 5 years in the Australian market.
So I guess the question is around what does, let's say this thesis is right.
Yep.
It plays out. What starts to slow it? What ends the boom?
Well, obviously, if migrations was making it go crazy, and they're pulling that back to it, that starts to be curbed to an extent. But then affordable housing starts coming back in as well. So we already saw. Obviously, this is coming out as a pretty big thing at the moment. Rental crisis. I called this a couple of years ago that South Australia had to change their policy with granny flats, because it was wild. That it's one of the tightest rental markets in the country. Huge blocks all over the city, and they're very pro infill state. But then they didn't allow grannies to be rented separately. You couldn't build them and rent them separately. Melbourne's the same. ACT's the same as well. And Northern Territory's the same. But for South Australia, it was crazy because the market was so tight. And then the government just came out, it was about a month ago now, and said, we overrule all councils. As long as it's complying development, you can build them and rent them separately.
Oh, wow. Okay.
And then Victoria last month as well, I think it was Dan Andrews' last thing before he left, he said, this is the thing. Everyone got so excited about it. Oh, you can get granny flats through no problems now as long as it's complying development. But they didn't change the actual leasing laws. So you still can't rent them separately to a family member. So it still has to be for a family member. But that will probably change very soon as well. And so these are the ways, because there are, even in Melbourne and South Australia as well, there's a lot of people that have built these things but keep them for family members. But if we can change those and start allowing them to be leased, that's going to change the game from that perspective as well. But I think driving these affordable housing projects, how do we cut? If they want to build 1.2 million homes, maybe don't look at it as on their own title. Maybe secondary dwellings and things as extra roofs, second income streams as well, which will help people hold during higher interest rates. But then create those more rentals to help ease the pressure on that as well. They need to cut red tape, but from a development perspective, if they're not going to ease immigration, they need to ease that red tape that's all around developing as well.
Yeah. So really, to sum that up, it's a supply and demand question. Right
Always.
now, this boom is being driven by extra normal levels of housing demand from net overseas migration and normal levels of supply with builders going out of business and stuff like that.
Yeah.
And how this boom ends is migration comes back to normal levels, so demand eases off a bit and supply comes online as we have more builders and they're building more homes.
And more land starts coming through. Like that's a big thing as well.
So I think it's almost economics 101, supply and demand.
I know. That's the thing you're looking at the moment, just going literally supply and demand at the moment. Like it's exactly the sort of cycle you want to be walking into. So, which seems crazy because of this run that we've had in the last 10 years. But I think it's then relative of looking, okay, well, where is the most potential in this situation as well?
So Sam, for a lot of the community who are sitting listening to this thinking that it's, dire straits and property, that the dream of property is out the window, and the next 5 years we're looking at even worse situations to enter. Your job is actually to help people find good investments, not from the owner-occupied point of view. So, it is an alternative for people who want to get into the property market. Owner-occupied is out of the question, but you want to take part in this boom that is about to eventuate, or we're in the midst of. A, what should we be doing to prepare ourselves or take advantage of this opportunity? And then B, what are some areas that you're seeing outside of Sydney where this next cycle is really going to take effect?
Yeah, mate, it's a great question. So I think one of the biggest things is a lot of people, and we had this conversation last time when we were on, a lot of people are fixated on buying in their own backyard and, well, I want to buy in Sydney or Melbourne or whatever. They're very unaffordable for most people now. So like if people are thinking, in dire straits, what am I going to do? How do we make this thing work? If you look further afield and start looking like that last podcast we did on rent vesting, right? And what is available from that perspective, you can build a significant portfolio outside of a primary residence and rent vest and then go down that avenue if that's where you have to go down. Or if you're in your primary residence now and you can still go down that avenue and still do that, you don't need to be going, as we laughed about at the start, buying $1-2 million properties as investments. There's plenty of different price points, and the market and the price points in those, they're all relevant to the local, economy and location that they are there as well, and income levels of those areas. So what I'd be saying, I guess, kind of firstly, if we were to look at like areas or where we could potentially take advantage of, like I was saying before, your smaller capitals are very much under fire now as well, being, your Brisbane, your Adelaide, your Perth, huge amount of infrastructure projects, a lot of affordability, great price point for housing and good yields on them as well, with, as we said, super tight vacancy rates because there's just so much demand for rentals at the moment. So there's some kind of great areas, that we could be looking in. And then if you look further afield, you drill down into some really good regional hubs, regional locations as well. There's probably about another half a dozen of those that are showing some real promise to also benefit from this uptick and this boom as well. But essentially, man, like I wouldn't be fixating on, I can't do anything or be super, upset and cut about the way that this is happening. There's always somewhere to put your money in. There's always somewhere to make money in property because there's always somewhere with an external influence that can drive a market. But you don't have to think about, $1 million plus markets, whether you're low income and you're just trying to start out and you're buying to a $300,000 market, or you got a bit more and you're looking at $400,000, $500,000, $600,000 with a good yield, good return, and you're positioned for very good capital growth. They're very good markets to start in. And if people rewind 10 years ago to Sydney, there were a lot of markets in Sydney 10 years ago that were $300,000, $400,000, $500,000 markets, which is crazy to think about, but they were there. But fast forward now, they're probably $1 million markets or more. But it's always relative. So like in 10 years, we'll be looking back and Sydney's at the bottom of its cycle about to start another big run. But we look back now on the smaller capitals I just spoke about and all their areas now that with, $400,000-$500,000 are now $800 $1 million markets. And that's where you got to think about this thing. It's looking further afield, thinking outside your backyard and just looking at where the opportunities are. And that's obviously what we help a lot of clients with. We pick apart, where are the right locations to invest in, where's going to benefit the most from, say, this next coming boom. And then, really help the clients position themselves in those markets and then strategize. Well, how do we then pull equity out of that deal, roll on to the next one and keep building, the portfolio from there as well. So there's always opportunity. Don't think in dire straits, always opportunity. You got something and you're willing to have a go. There's definitely some good opportunities out there to get amongst it.
Yeah.
Nice.
Yeah. Well, Sam, love it. I think that's a good note to end it on. There's always opportunity. As much as people might be lamenting what the property market is, if they're trying to get in, they can look a bit further afield and see where the opportunity is. If people want to hear more from Sam, your podcast is Scouting Australia.
That's
podcast.
The one. Yep.
And they can hit you up at the Australian Property Scout website as well.
Yeah,
so plenty more content from Sam. But I think we'll leave it there.
Perfect, boys.
Until next time.
Thank you very much. Appreciate having me on,
Sam.
as always.
Nice one.